Hey, Jeffrey Scott here. This is my Market MRI Pro update for Tuesday, September 23rd, 2025. Well, today was different. We had a sell-off, kind of, not everywhere. Big names certainly leading the sell-off. Some of the big stocks, one that I hold, Baidu, got hit pretty hard. That's why we have stops. But so did a lot of things, Microsoft and others, Amazon. Big names led them. Now, is this the end of the bull? Is it just a one-day wonder, a little bit of rotation? Could it be a bear trap? Let's take a look and see what the charts show. Again, it's Tuesday, September 23rd. My name is Jeffrey Scott, marketmripro@gmail.com. Google group is called Top Down Trader. Disclaimer, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools, top-down analysis, and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention. Trading stocks and options should be considered risky, and you should always consult with your financial advisor. And as I talk about often, I have tools in multiple platforms, and now I have officially signed off on the MetaStock tool, and now I'm just looking forward to it coming to market. Again, my Google Groups called Top Down Trader. Just go to Google Groups, click all groups, find the one you want to join, let me know how you want to be contacted. My live meeting, a couple of people have switched to the live from the online, which is great. Love having people in person. But October 26th and 27th, Marriott Palm Beach Gardens, 2-pack days of education, software instruction. 1250 includes all your meals, including dinner on Sunday night. If the weather holds up, we'll go out on my boat, Stocks and Docks, for a nice cruise with dinner. And if not, we'll go to a nice steakhouse. It's a full service Marriott, negotiated rates $155 a night. For more information, save your spot. You just need to reach out to me, marketmripro@gmail.com. The 1250, everybody who attends live or online for that price will get a rebate of $400 towards any of my tools, and that can be combined with other discounts. So you get the $100 for top-down trader discount plus the 400, and then if you have my market place package for wealth charts or my trade station package, that's an additional 200 each. So you can get the price down considerably when you buy it at one of the meetings. By the way, if you sign up, you don't have to wait to the meeting to take advantage of the discount. News and earnings. Today, Powell didn't really change his story. We still got more Fed speakers on Wednesday, home sales on Wednesday. Thursday, we got Fed speakers. We got jobless claims, GDP, third estimates. That probably doesn't move too much. Then the big thing waiting this week, besides too many to count Fed speakers, is the core PCE and the rest of the PCE complex and income and spending on Friday. From an earnings perspective, after hours, the big name on Tuesday night was Micron, and Micron was a good report, I think, in every possible way. And they traded up after their earnings, and we'll see if that holds going into the new day. A lot of times you'll get these pretty excessive moves on earnings, and then by the time the morning comes in, there's a reversion to the mean. Let's see, LAC, which is a small lithium player, up 72% after hours as Trump administration looking to give them a loan and take a stake. Micron finished the after hours up about 2.8%. Those were the big movers after hours. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. We got a big one Thursday night, which is Costco. For more information about anything I talk about, how I use the software, how I trade, feel free to reach me at marketmripro@gmail.com. For Praveen, who's the developer of the software, my partner, coding at marketmripro.com if you have any installation issues or questions. Um, Probably won't talk about my performance again until maybe the end of the year. But if you're wondering about performance, you can always look at what I did over the weekend where I sort reviewed from the first of the year and then showed the benefits of going aggressively at bottoms in terms of the market. See you in Florida on the 26th and the 27th. No, I am not having the meeting at this hotel, but I have in the past. But if you're coming with a loved one and you want them to love you more, to stay there. It's a Marriott Singer Island. It's on the beach. It's an awesome beach. Great hotel. How do I know it's an awesome beach? Because, hey, I used to live right down the street. Great place to be. All right, let's take a look at the markets. So what we can see here is 1 day performance volatility led. It wasn't up a lot, a little bit over 1%. The dollar was down a bit. Then all the indexes were down 0.17 on the diamonds, 0.23 on the Russell. Bitcoin was down 0.38. Spider was down 0.5%, and Q's down 0.66. And when you look at everything except for the VIX, everything was trading in the lower part of the range. What is interesting is despite that, the number of new highs minus new lows went up on both the NYSE and on the NASDAQ. Isn't that interesting? If we look at the S&P 500 sectors, we're led by energy, real estate, and utilities. And if you look below that, you could see the themes was gas exploration, things that have been dead for quite some time. MLPs popped up, aerospace defense, renewable energy, Norway, and then metals and mining. You can see the 1 day changes here. A lot of things were negative. And perhaps the thing that's most bothersome is the S&P 1500, over half the stocks were down. The NASDAQ, 64% of stocks were down, and the NYSE, 54% of stocks were down. So it was a negative day. It was a negative breath day. And it hurt a little bit today. But you get these every once in a while, even in a bull market. And we hadn't had one in quite some time. Look at the timing model on the daily charts. You could see reversal candles, kind of almost equal and opposites on the spiders and the Qs. They both reversed, but both above where they opened on Monday, and where they, kind of down a little bit on the week, perhaps. If you look at the Russell shot up higher at the open and had a clear-cut reversal. I made a comment yesterday about whether the Russell's going to do what it did at the end of 24 when it hit its all-time highs. Is it just going to reverse there? And kind of isn't behaving. And you could see the diamonds also had a big topping tail today. So nothing changed on the timing model, but my level of concern went up, which means so did the level of cash in my account, because that's how I manage my money. If I look at the weekly charts, you could see a reversal candle in progress with shooting star light candles on the weekly, spiders and Qs shooting, big topping tail on the diamonds, and still up on the week, interestingly, because of the massive move yesterday, but certainly the Russell gave up a lot today. So nothing has changed on the timing model. I've already been concerned because of the building up of divergences. I have to be careful here. I want to protect the majority of my gains that I've had this year. So I think the risk is a little higher than it was yesterday, but there's really no surprise here. And the way the market has been, it could turn around tomorrow. And one of the things that we've certainly noticed, I've noticed, is that some of these corrections from the highs are fast and furious and quickly forgotten. So we'll see where we go. If we look at the US index ETFs, let's blow up each one up and see if there's a story. I think the story is we're still in a weak time of seasonality, and this is the run up we've had. It's been beautiful. It's been relatively tight. We've had several short pullbacks. We're overdue one. Do we pull back into the beginning of October and then start to go higher? Certainly would not surprise me. And as I said last night, with the 17 here, 2% below, and then the 50 down here, closer to 14, not even 3% below. Or 3 to 4%, do I expect the market to break down here? I don't. I would not be surprised to see us pull back as far as the 50. We don't have to, and we can go straight back up to new highs. But if we were to pull back, my bet it would be an orderly pullback and with lots of obvious places. Here, the close is at the about 600, and the 50 here is about 573. So that's 4 to 5%. Certainly not a significant fallback to get to the 50. If we look at the diamonds, the same exact story. Beautiful uptrend, have had touches of the 50. Why won't we get one again? So we closed in the area of 460 and 2%, 3%. Pullbacks to the 17 or 50 have to be expected. They don't mean that the uptrend is over. They don't mean the rally is over, but they're all in the realm of possibility. Do I think that will happen? It hasn't happened in a long time, and odds are we go down a day or two and come back up. But with the negative seasonality, I have to be aware of that. The Russell, here's what I talked about last night, or yeah, I think it was last night. This was the last new high. And right away, we hit a new high, and we sold off. And I'm just hoping that we don't see the same thing here. But this is a topping looking candle with a fairly big wick on the top. Now, again, weaker in seasonality for a while, and then we expect the going into the end of the year for especially November, December, run back up to new highs would be my guess, especially if the Fed is cutting. So that was the Russell. Volatility, and I commented the last couple of days that volatility was going up, despite the fact the market was at all-time highs, and I thought that was something to pay attention to. It was up 3.48% today, and the dollar, which really has been struggling to do much, and I play around too much. Let's go back. Is really bouncing around at a point that it's failed to clear here way off the high. Dollar's not a story. Now, not only did the market show some reversals on Tuesday, so did some of the commodities. Gold, back, massive move overnight, couldn't hold it, still closed up 0.44%, but really gave up much of its gains. Silver actually is a red candle. So just on my methodology, if you're white, it means you're up on the day. If it's red, you were down on the day. So the red candle here was down 0.18. If you're an open candle, regardless of color, you closed above the open. And if you're a red candle, you close below the open. That's just how I like to keep track of things. So silver, um, a little crack there, not a big sell-off. Oil up a bit, but just struggling here at the 50, up 2%. Natural gas not doing much. And then if we look at the 10-year and the 30, I think unlike the last couple of days it moved up, we gave back a little bit, which is probably good for the bulls, down 0.75 on the 10-year. And if I jump down here to the 30-year, we can see we were down 0.57. I worry about it up here. I worry about it when it goes straight up. A little bit of movement down here, not really worrisome, especially when it fails at the 200 like it did today. From a buckets perspective, not enough stocks building up below to say that we're any close to a signal for the sell-off. But you can see gray up here, which means stocks moved out of the top part of the Bollinger Bands and started moving into the band. So a little bit weaker today, clearly not a signal day. Market breadth, shooting star on the NYSE, reversal, closing lower on the NASDAQ. Here it says volume wasn't bad. Well, I've got my other computer to my right. Let's take a look at NASDAQ, NYSE. Today is Rosh Hashana. Volume was average. That's good to know. I made a comment yesterday. The old adage is you sell Rosh Hashana and buy Yom Kippur. I would say that my worst tradings of the year over the last 10 years have been Rosh Hashana, mostly because I don't do anything because I'm in services and the market usually goes down. But Yom Kippur has been the opposite. So Rosh Hashanah is 2 days for many. And so tomorrow is the second day, which means a lot of Jewish participants in Wall Street probably will not be in the markets. From a breadth perspective, stocks above the moving averages continue to either be neutral or falling. It was positive for new high, new lows, and that's been green for a long time. And I like that because I often say new highs in the market are not built upon new lows in the stocks. However, when you look at the AD line, there's a lot of red, including on Tuesday on new high, new lows was positive. You had bangos again on the NYSE. It did trade higher and close above the open. That shooting star on not big volume, but shows a lot of excessive buying. And then you've got no signal here, new signal on the NASDAQ. And then I like to look at a bunch of things. I concentrate on this little green thing, the new high, new 13-week new high, new lows, 0.66, 0.78, 0.7, and 0.87. The only thing that's still on the overbought side is the Russell 2000. It doesn't look like it's going to stay there for long. And if you look at the AD lines in magenta, if you look at the stocks above the moving averages, all of these showing some element of divergence. So, summary on the market would not surprise me to see a few more days pull back. I don't think this is a major fall in the market coming. I think that worst case we pull back 3 to 5% into those 50 period moving averages and then bounce. I do think we go into higher highs by the end of the year. Fed's cutting in the setting of a decent economy works, except in the setting of a recession. Don't see one. Could happen. Probably happens next year at some point. And I think that the PCE coming at the end of the week and jobless will be very telling as to what this market does. From a longer term sector perspective, you could see leadership has been communications and technology. Both of them dipped a little bit today. You could see a glimmer of hope coming off the utilities and the staples and energy, some of the more defensive plays, even real estate showing some strength. So could be rotation, could be the markets don't sell off and we just continue to rotate a bit. If we go into the JAS layout, which basically looks at how I like to put my indicators on the chart, up at the top is a thing called the high-low jump, and it looks for stocks that are at extended. Above 95 or below minus 95 is what extended looks like. This was extended to the downside, and that's where it reversed. This is my trending indicator. The top is daily, the bottom is weekly. For moving averages, the 17 in green, the 50 in white, the 200 in red, all simple. And then this yellow dotted thing is an attempt to play around with a chandelier. I put seasonality on every chart, and this is a projected in magenta 5-year and the gray 10-year performance. And then on the bottom, we've got volume, we've got my different momentum indicators, we got relative strength, and we've got volume, OBV. So I look at stocks the same way, regardless of platform. First, let's break down and look at what's winning. Now, I showed you the S&P 500 sectors. Well, I've got probably 4,000 stocks. Let's see what I have today. 3917 that make my screen, and then they're all put into sectors. The leader is energy, and it's such a big jump compared to everything else. Maybe it's worthwhile. Let's pick that one. Utilities, I'm looking at the FM2 and healthcare. Let's pick those three. So I ranked them by this thing up here. Now, now I have all the industry groups in those three. Let's rank them by that FM2 again. Let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That gives you 214 stocks. Now let's go down here and let's filter out $5 and 500,000 shares. Guess is down to 136. Let's rank them here by number of momentum signals. Let's just take a look at some that we found. Vital energy, I believe this is an exploration and production. If you click in this thing up here, it brings down the fundamentals. $1.81 coming against $1.61, so it's got a little bit of growth, 15%. Revenue 45 coming in against 45. Revenue is kind of flat. trades at a multiple very small of 2.37. So this is a very cheap by every metric um, small oil producer. Why did it come to the top? Well, look, it had a really nice day. It had a CPR signal. It had volume, breakout momentum, and it also had a John Person buy signal, which is an add-on, not part of the program. VET, another oil producer. This one looks a little bit more interesting to me. Why? Because it's broken above the 200 on massive volume. Next one down is Range Resources. Um, Again, you've got a lot of these beaten up energy stocks moving. PBR broken above the 200. I find that one to be intriguing. Earnings per share. None of these are going to look great because they've been up and down with the price of oil. This one pays a 22% dividend. That's pretty impressive. PBR, I'd have to see how safe the dividend is. Trades at a low multiple. It's a Brazilian stock, and that's kind of a downside of the stock. And if you click over here, you can see if there's any news. Surrendering a lot of blocks. If you want to know about any of them, you click on them, and it'll bring up the story. Another small one, but look at the difference here. Again, not an expensive stock. If we look at over here, it trades at a multiple of 7. It had massive earnings expansion at the last event. Now it's looking at $1.29 versus a loss of 10 cents. So you're going to see a lot of earnings growth. I like that. It trades at a multiple like everything else, a little bit over 7. Small dividend. Of the oil producers so far, this is the one I like best, especially since it's taking out the prior highs. So I guess the standout thing here is these are all energy stocks and bridge. And then you get to the drug distributors. And those that have followed me know that I have a special fondness in my heart or in my bank account or both for some of these. I sold a business to Cardinal Health in 2010. It was great. They did well by me on the deal. And then I went to work there and they said I make too much as a salary and we're going to drive you down to where you would fall in our pay scale and we're going to make it up in options. And when they bought me, the stock was $28. And when I retired from them or left at the end of my contract, it was 85. So it was like getting paid twice. These companies are incredible when the market is weak. And there's 3 of them. We'll look at them very quickly. So Cardinal Health is pulled down, sideways move, big breakout today on good volume. I like this one a lot. McKesson is another one that does well in weak markets, taking out these prior highs today. And the third one is Cencora, which I don't see at the top of the list, so I'll just type it in. So two of the companies that I've sold with my partners have been to Cencora. If you look at these things on the long game, just throw up a monthly chart. I mean, could anything look better? That's core. Cencora. What about McKesson on the long-term chart? Probably take forever because of all the data it's loading. I mean, this is 10 years and it's gone from 146 to 800, almost 800. I know NVIDIA's done great, and I know that a lot of other tech stocks have done great, but boy, oh boy, these haven't done so badly, have they? Wow. And Cardinal, I don't think it's looked as good, but it's looked pretty good itself. Great companies, amazing operators, all 3 of them, and they do well during tough times. So that's top down. You take the top sectors. And the top industry groups, and you take a look at what's leading, and that's one great way of trading. Okay, now the JAS layout if I go to the impulse list, oops, now I got them all clicked. There we go. If I go back to that impulse list, which is right here, and I look at the 3,900 stocks when I take off my filters, how the heck do I look at this many? So after I do my top down, I go to my secret weapon, which is my 2 days Momo up. I look at $5 and 500,000 filters, and I want to be above the 200, and I want my weekly bongo up. So I want to filter out how many there are. If it's too tight, I can take off filters. We got 6 stocks. Heavy healthcare. American Mobile. This is a communications, it's telecommunications somewhere. Let's get out of monthly and go back to daily. Thank you very much. Looks a little bit different. What a move. And what's triggering this signal here are these two momentum dots in a row, which are these down here. Notice relative strength in green above the moving average, as is OBV. Up here, let's click on the price bar. It tells me we're at 100%. So I love this pattern, and this looks like it's going to go higher. But when I see the high jump at 100%, I don't buy because it's too extended, and I expect it to pull back before the next leg up. Next one on the list is COGT, Cogit Biosciences, cheap biotech stock, big run up, sideways move. Um, I don't know anything about this company. I mean, it's sort of breaking out of a flag here, sort of a complex pattern up here totally. I might wait till it takes out that high, but that looks reasonable coming out of a squeeze. Relative strength is starting to turn up. CSX, same pattern. This thing's well off of its highs. Again, I can come in here. I can see when the next earnings are, October 16th. So that's about 3-4 weeks away. 44 cents versus 46. 360 million versus 360 million doesn't do much for me. Um, it is uncanny how often these two dot signals here lead to further gains. MiniMed, another healthcare stock. I don't know much about it. Uptrend, sideways run into the 200 to the 50. Often this is a signal before it takes off. That one looks interesting to me. Vet is one, that energy play that I thought looked interesting. Now, I'd want to be careful, and because clearly going all the way back to 23, this 200-day moving average in red has put a hat on the stock price. What happened here that's different and why it's interesting is it broke above the 200. So if you don't have much energy in your portfolio, I don't think this is a bad thing to buy. Pays a dividend of 3.4%. Not a big earnings grower, but I figure all that's baked in. It's whether it beats the number. Seasonality is okay. I like it because it broke above the 200. To be safe, I might wait for it to take out today's high because there's a good chance, as it did here, that it goes back and fails the 200. But if it doesn't, that would be interesting. And then Welltower is a REIT. It's of healthcare facilities. 2% dividend, steady Eddie, a little bit of growth here. And I like this, and I like its family of stocks of healthcare REITs because physician offices, hospitals historically don't go out of business very often. So there's a number of stocks to look at. My personal perspective is with the daily charts looking like this, I don't think I enter any buys and until they take out today's high on the spider and the Qs, get back above the all-time high on the Russell, and I really think the Dow at least get back above the close. We got to reverse what damage was done today, because the other option is that what we see is we go up to that. Let's see if we can do that up to here, and we're happy with ourselves. and then we do this. And we start coming down. And so I like to see us clear those levels before I start to deploy new cash. Am I worried here? I'm worried. Same token, I want to give the market a chance to prove me wrong tomorrow. But I raised some cash today. I got stopped out of some of my positions today. And if the market turns around, goes higher, awesome, I'll make money. But if the market pulls back, I want to make sure I got some cash on the side. Because if we get a 4 or 5% pullback, that's when you can make some money. Take care, everybody. And I'll post something most likely tomorrow night. And to my new friends from the Saturday meeting, and for the friends I'm going to see this Saturday in San Francisco, good trading.